Warnermedia and Discovery merge. Is AT&T a buy now? And with that, welcome back to Investing for Generations, your channel for high-quality stock research for long-term value investors. So AT&T and Discovery create a new streaming giant because AT&T merged Warnermedia with Discovery. And the question is this a good deal for AT&T, and is AT&T maybe a good buy right now? If you follow me for a while, you know I owned AT&T a while ago, but then I sold at the end of 2020 my shares, and the reasons for that was very simple. Two things. The one thing is that AT&T have way too much debt, and on the other hand, or maybe it plays together, the management of AT&T, they made really some poor decisions in the past, and so I don't really trust them. This was the two reasons I sold at that point. And now, of course, with this big news of the merge of Discovery and Warnermedia, the question is it maybe time to come back to AT&T? And of course, first of all, after this news broke, there was kind of a little bit panic because with this merge, there will be a dividend cut for AT&T, and of course, AT&T is one of the most popular dividend stocks around for a lot of income investors. And so this was big news for them and really bad news for them, for sure, at least on the first view. But is this really all behind this move and this deal? And I want to go through the facts of this deal and then come to a conclusion for me if I will go back to AT&T right now. So first of all, in the new created company, AT&T shareholders will own 71% and Discovery shareholders will keep the remaining 29%. AT&T will ultimately reduce its net debt by $43 billion at closing. It's not just that AT&T will merge Warnermedia, also 71% of the new company will go to the shareholders of AT&T. An important point, and the other important point here is that with this deal, AT&T will reduce the net debt by $43 billion. This is very important because, as I said before, AT&T have really a lot of debt, and so they can reduce this debt immensely. Right now they have long-term debt of $160 billion and can reduce that by $43 billion with this deal. A big move, but still then they still would have a lot of debt. Funny enough, the reason for this high debt of AT&T was the acquirer of Time Warner in 2016 for about $85 billion, including debt. Of course, when the shareholders of AT&T have 71% of the new company, the also important question is, what will this company be, this new company? And the management project that the combined media company will have $52 billion in revenue in 2023, making it the number 2 player in the media big leagues behind only Walt Disney. So they create really a big player in the streaming market, in the media market. On the other hand, AT&T said it would reset its dividend as part of the transaction to payout ratio of about 40% of free cash flow, which management estimate at least $20 billion in 2023. That means roughly $8 billion in annual payout, or some $1.11 per share. Should the post-spin-off equity trade for the same annual dividend yield as Verizon Communications, currently 4.3%, given a similar leverage and business profile, it would be worth $186 billion or about $25.88 per share. Keep that number in mind. Management said Monday that they expect Warnermedia Discovery to generate about $13 billion in adjusted EBITDA 2023 and to be levered at 5 times net debt to adjusted EBITDA at closing. That implies about $65 billion of net debt on the new entity. At a Disney-like multiplier of 17 times 2023 EBITDA, Warnermedia Discovery would have an enterprise value of $221 billion and its equity would be worth $156 billion after subtracting net debt. AT&T shareholders, 71% stake would be worth 110.8 billion or about $15.40 per current AT&T share if the stock gets the same credit from the market as Disney's. At an 8.5 times enterprise value 2023 EBITDA ratio in line with Viacom, CBS and Discovery today, the same math yields a value of about $4.49 per share. At the $25.88 value of the AT&T's telecom businesses, and AT&T stock today could be worth between $30.37 and $41.28. So thanks to MarketWatch for this math. And when we see that currently AT&T stock is traded around $30, then you could say, okay, this is quite a fair deal with maybe a lot of upside, but at least maybe not a lot of downside. And this deal have a lot of positive side for AT&T and the business of AT&T, because now they can just focus on fiber 5G. This is the future, obviously, and so they have breathing room and can really compete with Verizon, for example. On this point, this is really positive for the main business of AT&T. And also the CEO, John Stankey, it seems like it's very positive about this deal. He negotiated, so hopefully he liked it. But anyways, he bought for $1 billion shares of AT&T. Of course, every time when the insider buy big, you should at least notice it and maybe follow. And also UBS in this case says leaner AT&T, which is focused on the main business, is a buy. And so the question becomes, is it also a buy for me now? Should we buy into AT&T now? And on the one side, yes, there is a lot of positive. With a way lower debt after the deal's done, they have a lot of breathing room to really focus on the main business. And just remember, AT&T in the main business is still a cash cow. It's a very good and very profitable business. And on the other hand, you also get a share of the new company, the second biggest player in the media sector. Don't forget that. On the other hand, there's a lot of questions still. As I said at the beginning of the video, I don't have a lot of trust in this management. They brought AT&T in this difficult situation. Maybe they found a way out and maybe the future is really bright. I don't know. But I still have doubt in this management. And on the other hand, they have a lot of competition, especially in the 5G sector, which is very, very expensive. The rights for the 5G is very, very expensive. Who knows how this will go on? So there is a lot of question mark too. And so for me, at the current prices for $30, I will put AT&T again on my watch list. I will not buy now because I'm not sure about this deal. I think there is some upside, maybe less downside. This is one thing. I think there is not a lot of downside, so maybe it could be a good investment long term. For me right now, the discount must be higher. If the stock maybe drops another 10% or even more, then it's maybe time for me to buy again into AT&T. That's my opinion on AT&T. Let me know in the comment section what you think about this deal. And if you like this video, then please subscribe to my channel, like and share this video, and then we will see you the next time with another analysis of another stock. See you then. Take care. Bye bye.